Hello and welcome to this episode. Is the Bank of England failing? There has been a very serious discussion on this issue for the past few days. The Bank of England is considering increasing the level of protection given to bank savings in response to recent upheaval in the financial sector. Currently, deposits up to £85,000 are protected if a bank fails, far less than US banks. Bank of England Governor Andrew Bailey has said that he does not believe there is a risk of a 2008-style crisis, but he questions whether UK banks are holding enough liquidity or available cash to cope with short-term shocks. Rules on how much money banks hold in a case of trouble are being reviewed, as well as bank deposits insurance scheme. Speaking at the International Monetary Fund meeting in Washington, Bailey said that the reforms put in place after the 2008 financial crisis had been effective during the recent turmoil, which saw rising concerns over health of global financial system and a slide in bank shares around the world. He said, and I quote, "The post-crisis reforms to bank regulations have worked," unquote, Bailey said. "Today, I do not believe we face a systemic banking crisis. When I look at UK banks, they are well capitalized, liquid and able to serve their customers and support the economy," unquote. However, regulators are now focusing on whether banks need bigger cash buffet given new challenges. In particular, the spread of news on social media and electronic banking means that savers can move their money out of financial institutions within seconds, making them more vulnerable to sudden bank runs. Bailey said that regulators shouldn't assume that the current levels of liquidity protections were correct. Runs can go further much more quickly, he said. While Silicon Valley Bank ran into difficulty, $40 billion were withdrawn from the bank in 24 hours amid social media rumors. As savers were able to instantly take out their savings digitally, the chair of the US Federal Reserve called it the fastest bank run in American history, and the authorities stepped in to protect all deposits. Standard deposits protection is already significantly higher in the US at $250,000 or £200,000. Both US and the EU, where deposits are protected to comparable sizes as in UK, are considering raising their levels of protection. However, such moves would come at a cost to big banks and could potentially limit flows of credit. Protection for bank deposits administered by the Financial Services Compensation Scheme was increased substantially following the 2008 financial crisis. Before that, savers were covered for less than £32,000 per institution. For most individuals, there is little chance of ever having £85,000 in a bank account. However, whenever there are wobbles in the banking sector, the safety of savings is of immediate concern to many, particularly older savers with savings held to recover retirement, hence the wider reassurance provided by the safety net. The extra protection available for people who have sudden influx of funds due to life events such as divorce settlement, inheritance or payout from a life insurance policy, the temporary high balance protection covers deposit up to £85,000 and £1 million per institution for up to 6 months. Bailey has also called into question whether UK banks have large enough cash buffet to cope with crises similar to the recent run on Silicon Valley Bank. Speaking at an event in Washington DC, Bailey cautioned, "We can't assume that going forward that the current answer on the total size of liquidity protection is the correct one. We saw with Silicon Valley Bank that with the technology we have today, both in terms of communication and speed of access to bank accounts, run can go further much more quickly. This must beg the question of whether what are appropriate and desired liquidity buffers that create the time needed to take action to solve the problem." Bailey also acknowledged that requiring banks to hold larger buffet risk having an impact on economic growth. Thank you for your time and have a good day.